Hello, this is the Chartprofit webcast. We are about 3 hours into the trading day on Friday the 13th of November. This is from the pre-open today. Just quickly want to review recent comments. So here on Monday, pre-open this Monday, I was referring back to the previous Friday, which was this profile here. As you know, I've added in some extra information into the profile detail at the bottom here. I said pre-open Monday that on Friday we saw buyers active. That's these numbers here, the plus numbers at the bottom. So it's Friday buyers active at a lower value area here below the previous days, indicating ineffective buying. And I said that that indicates the possibility of further weakness, especially as the value area was below 2095, the 12-month point of control, which came in about here. So I said that at current levels I want to see price back above 2095 before assuming higher. I said that sellers have an opportunity at the start of this week. Let's see if they make a mark. So on the Monday we saw a decline down to test the 5-month support level, our first level support at 2063, which was here. So we just saw that test on Monday. And I said pre-open Wednesday that that support had held, and that the E-mini is not in a weak position unless that level is broken. Went on to say this looks like normal corrective price action so far, but I would prefer the E-mini back above 2095 before considering new longs. Just referring back to the Monday, what was significant was intraday we saw selling here, these negative numbers, and the value area was lower here and wide. This plus number indicates it's being the value area wider than average. So this was effective selling in the day frame. These extra numbers giving me that information. And although we haven't actually seen significant selling, i.e. red marked, it was giving us a clue that the sellers were possibly taking control. On the Tuesday we saw intraday buyers active, here these two plus numbers, but the value area narrowed. Minus 29 indicating a narrow value area and ineffective selling in the day frame. Off this support, what you're looking for, if not significant buying being marked, at least an indication in the day frame that when the buyers are active intraday like here, you'd see some indication that their activity is effective. A higher, wider value area would be that kind of indication, and we didn't see it. We actually saw an inside value area. So over here, pre-open Thursday, I released this about an hour before the open. At that point the E-mini was trading up here somewhere. I said that time printed below 2063 would indicate further weakness. Also went on to talk about momentum, which I'll come to in a second. At the time we opened on Thursday we were actually printing at a weak price location below 2063. In fact, if you look at the bar chart in the background here, we saw a test right here up into that level, which was immediately rejected. So this 2063 5-month point of control became the resistance intraday, which is a weak pattern, and we saw the sell-off to the weak close and aggressive selling marked. A lot to take in there, but basically we switched to effective selling. It's now, in my view of looking at things, we're now looking for evidence that the buyers are going to get the control back. I mean, certainly in price area that we're currently printing, I want to see the E-mini back above this point of control at 2063 unless this migrates before considering the long side now. I've been talking about momentum in the pre-open. This is a momentum indicator, price momentum at the bottom here. I call it the price oscillator. I've mentioned this many times. When we're above zero at a kind of elevated level and we see price momentum turning down as it did here on all 4 stock index ETFs, especially, we usually see it's quite reliable that you would see this indicator getting back to or close to the zero level, like we did here, although these aren't particularly elevated. It's just something that I've noticed over the years in a pattern that we can use. So we're probably going to see this price oscillator getting back close to zero, and at that point you normally get a better entry on the long side from the point where the indicator turned down, which would have been about here. Now, it looks to be the case already, to be honest. So there's been some deterioration this week. The breadth has gone back to neutral here, to grey. We probed above on the spider, but just above the point of control, which is at 209.90. We've seen in the longer time frame, seen that rejection. We've now marked some significant selling here, and that's the red bar. Next obvious level of support on the spider is 198.10, which is the half range from this year's high down to the low here. So this is the spider on the live chart here. Here's the support at the halfway point I just mentioned. We're lower today into the end of the week, and price oscillator heading down towards that zero level. One of our key charts has been the Russell 2000 ETF, IWM. We were monitoring this major point of control. It became important when it was resisting the rally of the September low. At this point we broke above it, which was encouraging. We then monitored this halfway point here, and we have probed above it, but we failed back below that level and also back below this major point of control at 115.35, which now puts the Russell 2000 ETF in a weak price location here. Another key chart we've been following is the UK's FTSE 100. The major point of control is at 58.70 on this chart. This is major support. We kind of saw just a very brief probe here below it in August on the really volatile down day, which just briefly tested below that level. We saw support just above it here, and this is an encouraging pattern. We rallied back to the halfway point. A lot of indices like, well, not a lot, but certainly the US large cap indices obviously have spent quite a bit of time above this resistance, but the FTSE, the UK FTSE 100 hasn't really managed to do that, and therefore being a relatively weak chart, we're seeing quite a sell-off to end the week here. So this key chart that we've been monitoring for quite a while never really confirmed by printing any time up here, which, as I mentioned many times, we were looking for. DAX, the German DAX index, also found very clear support at its major level here. Spent a little time above that halfway resistance, but ended the week back in a weak location here. So it looks as though this week some of the divergences that we've been monitoring are playing out, the negative divergences. This is from the ebook that was released at the start of the week, just showing the negative divergences between price, which I said last week had gone higher clearly here, unconfirmed by these indicators, these breadth indicators below here. And here you see the updated chart through yesterday, and you can see the net volume percent 10-day moving average is below zero. The net new highs 25 indicator, the 5-day moving average just dipping below zero here. And most likely the percentage stocks greater than their 50-day moving average, I would guess at the close today, most likely just be below here. So we're seeing weakness now being confirmed on the breadth chart, and this may lead to further weakness in charts where there's no clear sort of local or close support. For instance, as you've just seen here on the spider, the closest obvious support I can find is down here at the halfway point. Here on the E-mini December contract, halfway point down here at 1971. If we find support there, I'd be looking at the long side with some evidence. Failing that, I want the E-mini back above 2063 in here. I'm going to quickly run through the sentiment. My version of the Ridex assets ratio on Wednesday reached just above 8 at 8.41 here. That was a 57-day high. Last week I noted in the webcast that the bull fund assets that I follow in isolation had rallied really sharply, had increased really sharply up to a level here last week, which I said last week, only these readings here in the entire database were higher than the one last week. Bull fund assets had really fallen very sharply indeed, as had the money market assets as well over the past few days. So the Ridex retail traders, as I mentioned last week, possibly getting a little over-enthusiastic. What we'd be looking for now is if the market declines further, you'd want to see the ratio actually falling as well pretty swiftly. If the market's down early next week, and the ratio stays elevated, 7 or 8, that would probably be a short-term bearish signal and we'd see further weakness. In the public poll from AAII this week, the bulls percent was lower, the bears percent was higher, so the net lower here than it was the previous week. As we've mentioned 2 weeks ago, bulls percent reached its highest level since February. Bears percent just 1 week ago fell to 18.6, that was the lowest since February. And right now the 4-week moving average of the net, the bulls minus the bears, at 15.58, that's the highest since March. The last clear signal was down here when the 4-week moving average reached this extreme low. It was almost at the August low, indicated extreme bearishness from the retail trader here, and from a contrarian perspective, as we mentioned, that was bullish. Right now there's nothing in the indicator to suggest the market is moving higher from a contrarian point of view, and possibly this sort of rapid increase in optimism here up to its highest level since March. Remember, that was up here in the market. It's possibly indicating that there's more downside for price here. Not much changes in the investors' intelligence poll. Bulls percent was down a little, bears percent was slightly higher. Exposure index, active money managers, current equity exposure index just slightly lower this week, but the previous week it was at 69.16, that was the highest since June. And look at US fund flows this week, tell us there was a net equity fund inflow, including ETFs, of 1 billion in the week to the 11th of November. The 4-week flow is at 17.4 billion. 1 week ago that was at 20.9, that 4-week flow, and that again was the highest since March. Look at the supporting charts. We've been talking about bonds pre-open, and I've also mentioned IEF, the 7 to 10 year ETF, and the low this week has been right at its major point of control support at 105, and I said this is a good chart to monitor. So here's the comment down here. Here's the 105 level. This was written weeks ago. We've showed it before. It's the major point of control, and I've written the note here, price below this level is weak, and we've hit that support this week and we've bounced a little. I think the best indication would come if we do see price printing time down here. That would definitely be an indication of weakness. Right now we have a bounce. I'm not convinced about this bounce. I'll briefly show you first of all TLT, the T-bond ETF. The big support there is at 117.14, a little lower. What we're looking at here is the profile for December T-bond futures. I just zoomed out a little there. You can see the significant buying and selling. It's been significant selling here and here, and I'm also adding in this extra information onto these profiles that I have on the E-mini. So let's just go back to early November and look at these numbers. These negative numbers here indicate to me selling during the day, net selling for Tuesday the 3rd, and the value area was wide, this number here, and it was lower. So this is effective day frame selling. The next 2 days again we have net selling during the day, and the value areas are at least average, or here relatively wide, and lower again. No evidence of significant buying or intraday buying. Following day, last Friday, again it's net selling here, very wide value area here which was lower, wider, and here we have reactive selling. Again on Monday this week, selling during the day, wider or wide value area. Now Tuesday, net selling again during that day, even though the market was, the price action for this future was higher. So sellers were active, but the value area was here. It was overlapping higher, and that is an indication we're at least slowing here, or the selling is slowing and possibly returning. Again, the following day, net selling, very narrow inside value area, and then on Thursday we had some indication of buying from this number here. No significant buying marked, but we had this, and the value area was wider and it was relatively wide. So here's the live chart of that December contract. We just saw price action sort of through here, Just the interpretation and analysis I just showed you is probably enough to, if you were short, to get you to cover the shorts, but probably not enough to convince you, or certainly me, that we're going higher here. Back to IEF, this is encouraging, the fact that we've held that support. I want to see some green on the profile coming in before looking at the long side and anticipating a test of this level, the 18 month. I mentioned in the pre-open, I think it was last week, that on the daily chart copper had fallen back below its halfway point off the recent low, and then we broke that low, so copper went to a 6-year low, and I sent this chart out, the monthly, just to show you how weak copper is on the very long-term chart below the major half range, weak long-term price location. So here's that major halfway point. We were monitoring from this low to this high, the halfway point, and we did this, which I said was really weak. And you can see here we're down lower again at the end of this week. So if copper is a barometer of global demand, it's looking decidedly weak, this chart at the moment. That may be telling us something about the really big picture. Most of the commodities, all the commodities we follow in weak price locations, strength in the dollar obviously not helping, but we're seeing some really weak charts here. This is crude futures December, and here's that halfway point that we were following. It is here, and we've noted this support at that same level before it even became the halfway point, and then it's doubly important, we've traced back below it and we're seeing real weakness now. There's another chart looking like it wants to test the recent low. This is SLV silver. Again, off this low, we monitor the halfway point. We've broken below that. The 18 month that I've mentioned, time support resistance up here. I've said that we want to see price back above that level before considering the long side. Again, this is a very weak looking chart. Gold has just tested just yesterday this year's low. This is the dollar index chart. The big level is here, 94.67, which is the 12 month. As mentioned last week, briefly probed below that. That was rejected, and then we had quite a strong rally back up to the resistance, which is the halfway point off this high to this low, and we've found resistance here and here, but this time we consolidated above it, which is a powerful pattern, as I mentioned, and we're now higher again. This is a strong chart, stays strong unless you see price at least back below this level. Euro FX chart, mentioned last week, this is the halfway point off the March low. Had already been proven support here. We had that rally up into this 12 month, which was ultimately rejected anyway. Then we printed this little consolidation pattern in a weak price location below that half, and we're now coming lower. That's a weak looking chart again. I've noted this though on a number of these daily charts where we've seen this decline recently. We're seeing oversold levels with this kind of bullish divergence with the oscillators for here, the stochastic momentum derivative, but makes me less convinced that we're going to see an immediate fall here to test the March low. Should this indicator turn over again back down its moving average, then possibly, but I think we could, for now at least see some consolidation here. Not interested in the long side yet at all. Aussie dollar still in a very weak price location here, longer term, and the British pound, latest level from this low in April to this high, the halfway point, and we are consolidating below that level. That's a weak chart again. Just wanted to show you this chart, which I showed last week. It's the cycle, 5-year cycle. We've looked at this for a couple of weeks for November, and this week, which is actually a calendar chart, but this section here shows this week, and we've obviously not been higher this week, so the cycle is saying strength and we haven't seen it, and we're entering, this will be Monday here, and so next week is this section. We're actually seeing not a particularly strong period. So from the cycle, I'm not sure that leaves me very encouraged for the coming week. Just finally, I've sent you a link for the updated OECD composite leading indicators charts that I produce each month. If you follow that link, you'll come here. You have these flash controls at the top here, which can take you through plenty of information from these links. Total OECD leading indicators just dipped below the 100 level, which is important. US chart is below the 100 level and falling, as is the UK. OECD said this: the global trade has slowed to levels usually associated with a global recession. Issued a warning that trade would grow by only 2% this year. Such a slowdown in growth is usually a harbinger of a very sharp turn of the economy for the worse, said the organisation's chief economist Catherine Mann. This is deeply concerning. World trade has been a bellwether for global output. These are leading indicators, usually looking, I think, the OECD says a few months ahead. Recessions in the long term usually bad news for stock markets. There's currently a strange climate that we're in with a lot of investors looking for the response to the bad news from the central banks rather than the bad news itself. So we will concentrate on the charts. This is the E-mini right now. Next level support is down around here, but we're finishing this week most likely below 2063, and at current levels I'm not interested in the long side below that point. Okay, I got a feeling that was a longer than usual webcast, so we will conclude there, and if you're still with me, let me wish you a good weekend and thank you for watching.